What's up everybody? Welcome to the Stocks channel. My name is Cory and today in the stock market we see SPY breaking out of the downtrend as we go into the CPI data release tomorrow. And there are gaps all over this chart above and below. So first up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we're up 1.07% and we did get the bull breakout close above the resistance trend line and the 20 daily moving average, and we did leave yet again another gap open to the downside. Now I talked about this in the weekend analysis video that I did expect to see a bull trap before the next bear trap. So from the CPI data tomorrow, we could still see a little bit more upside to fully test that resistance at SPY 416. And then I do believe we will see the bears stepping in, and then we'll likely get a retest of the breakout for the bulls before we go any higher and continue into a bull trend. Now this is just my opinion, so do not take this as what has to happen. You always need to follow price action. But the reason I want to show you this is because it is possible in the short term, there could be a little bit of a bull trap setting up from that rejection of resistance. So at some point, these gaps below right around SPY 407 and down here right around SPY 401, I do believe could get filled during the pullback to retest the breakout, and a positive test of the breakout and a bounce from that level will be extremely bullish. So September is typically known as a very volatile month, and some people just confuse that with meaning it has to be bearish. But keep in mind we could have a bullish first half and a bearish second half and still have a very volatile month of September, even though from the start of the month to the finish of the month we really didn't go much of anywhere. So don't be surprised if we see SPY getting stuck in a trading range between 416 and down here right around 401 and get a little bit of consolidation before we see the next major leg in the market. If you zoom out, you can see this coincides with filling out the rest of this larger wedge building up, so this is very likely the price action we could be seeing over the next few weeks. Now above 390 we are bullish because that was our risk on level, but you do not want to set your risk too far down there. So right now you can set your risk right around SPY 408 to 409, or if you want a lower risk level, use SPY right around 403. Obviously, if these levels start to break down, it increases the probability we go fill the gap at 401, so do keep that in mind. And I do expect there to be very strong resistance at SPY 416. If we break SPY 416, you're looking for the gap fill at 422. On the Nasdaq 100 triple Qs, we are up 1.19%, and the triple Qs also got the bull breakout back over the resistance trend line and the 50 daily moving average, but did find resistance below a negatively sloping 20 simple moving average. Just like SPY, we have gaps all over the chart, so to the downside, you're looking for support right around 307, the support trend line right around 305, and the gap fill below that at 302. If we do get rejected from this level right around 311, we could see a retest of the breakout and fill one or both of the gaps below and still get a higher low bounce from that level and still start setting up a bullish chart. So do not be surprised if in the short term we are setting up a bull trap before the next bear trap. And if we do break 311, look for the next resistance at 314 and then the gap fill at 322. In the Dow Jones, very similar to SPY in the triple Qs, getting rejected just below the 20 simple moving average, and we have gaps to fill to the downside at 323 and down here right around 318. Look for support right around 322 and the breakout level right around 319. And if we break that, it could be a failed breakout and we could be coming back down to 315. Above the breakout of the 20 simple, above 326, look for resistance right around 329 and then 333. On the Russell 2000 IWM ETF, we're up 1.21%, closing right near the 20 simple moving average, which is still negatively sloping, and we do have gaps to fill to the downside right around 187 and just below 184. Below those gap fills, we have support at 183 and 178. And the bull breakout will be the break above 191 for the test of resistance just below 196. On the RK ETF, we are up 2.42%, and RK bounced off the 20 simple moving average and tested the 50 daily moving average as resistance, which is also our previous daily high just below 46. On a break above 46, look for the gap fill at 47, and this is still a risk-off bear market while RK is below 47, so you can get more bullish if we start to close above that level at 47. Above 47, we'll have resistance at 49, and on a breakdown to the downside, you're looking for support right around 43 and the gap fill just below. On the VIX, we were up 4.74% as the VIX is trying to backtest the breakdown through 24 as resistance, and so far the VIX is failing to close above that level. A rejection from 24 and crushing down below 22 will be a bullish indication in the VIX, which means the VIX is likely filling the gap to the downside at 21. Volatility coming back into the market means we should see the VIX spiking back above 24 That will be your indication to get more risk off. On Bitcoin, we're currently up 2.64%, and Bitcoin did get the bull breakout above 21,600, and so far we have a daily candle above the 50 daily moving average, with the next resistance just above at 23,200. Above that breakout, look for strong resistance at the previous daily high at 25,000. And if we do get the breakout above 25,000, this is going to look like a double bottom breakout, which is going to be incredibly bullish. Your downside support levels are now 21,600 and right around 20,400. On Amazon, we were up 2.39%, and Amazon did close back over the 20 daily moving average, and it looks very close to trying to fill the gap just below 138. That gap fill could instantly act as resistance, and we do have resistance in that zone, so it will be bullish if we do break above 138, and then we could see Amazon retesting 144. A rejection from the resistance here has you coming back down to the gap fills at 133 and 130. On Microsoft, we're up 0.83%, and Microsoft is trying to break back above that resistance right around 267, and if it's successful, you'll be looking for the next resistance just above at 270. A rejection from 267 could bring us back down to support, which is currently right around 256 and 252. Nvidia was up 0.82% today, coming back up to resistance at 145, but failing to close above that level. On a break above 145, we'll be looking for the gap fill at 150, and on a rejection from 145, look for the gap fill to the downside at 140 and possibly a retest of the low at 134. On Tesla stock, we're up 1.58%, and Tesla continues to look bullish after bouncing off the 50 daily moving average and breaking back over 283, and now we're over the resistance at 296, getting very close to testing the next resistance at 309. Now there is a gap to fill to the downside right around 299.8 and a potential retest of the breakout right around 297, so do keep that in mind. On a break above 309, that's going to be incredibly bullish, and we could see the next price target all the way up there at 336. On Apple stock, we're up 3.85%, and Apple came all the way back up to fully close the gap right around 163.5, and we did find resistance at that level because we did have 3 resistance levels with the gap fill, the resistance trend line, and the negatively sloping 20 daily moving average. A bull breakout will require a break back over 164, and a rejection from here could take us back down to about 159 or the gap close at 157.5. The financial sector was up 0.81%, continuing to look bullish ever since it broke back over the resistance trendline and coming into the more macro level resistance just above at 35. The industrials were up 0.6%, finding resistance at the 20 simple moving average, and we do have a gap to fill to the downside at 94. The healthcare sector was up 0.67%, continuing to build out that right shoulder on the daily inverse head and shoulders, so look for the next resistance at 132 and then 134. The energy sector was up 1.84%, continuing to bounce off of the support trendline, but coming into resistance right around 83 and 84. So jumping back over to the S&P 500, be prepared for a very volatile September, which could have a little bit more upside, but then I do think we're going to start filling some of those gaps to the downside. Remember, we're currently risk on ever since we bounced off 390, but you do need to continue to up your risk level in case the market turns around and starts heading down to fill those gaps. Always manage your risk and have a trade plan no matter where we go from here, and then just act accordingly when the price action gives you confirmation. Also remember, I still have my 50% off promotion code for getting 50% off your first month of bank trade alerts. All you need to do is apply the coupon code Labor Day, all one word, no spaces, at checkout to receive 50% off your first month. And if you're looking to become a better price action trader, consider joining the Stocks Channel Trading Discord community where you have access to all of my intraday updates and analysis. You can find out how to join Bank or the Stocks Channel Discord by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.